Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. You've watched the price at the pump going up like crazy, like never before, in fact. And now today, it is expected that this will go even higher along with your natural gas, along with every other commodity, it seems. Let's begin by taking a look here at the price of oil at the time of this recording is Brent crude, $120 a barrel, WTI at 119. We've seen it go to $120 a barrel despite what has happened with Saudi, what has happened with the OPEC Plus deal. This was supposed to actually alleviate some of the pressure. But remember, whenever we see all of the activities with commodities or anything else in the markets, it isn't always what it seems. There is more going on. You look at the actual traders, you look at what's happening with money flows, and you see what's happening with different businesses, and there's more to it. Okay, it isn't always something that's going to make sense on the surface level. You can kind of look over a longer term trend and then it makes sense, but there's always going to be fluctuations up and down. I mean, you see what's going on. Speaking of up, Texas power used to hit a record as temperatures soar. Texas electricity prices have risen 70% in the last year, and it's not even summer yet. Think about where we are headed right now. As people use more energy, that price is continuing to go up, and this is going to put a heavier and heavier burden on the people, and they have less money to spend at the stores and so on. You know this, I talk about it all the time. You could see what's going on with the prices. It is unbelievable, and I've been talking about this for a while. I hope some people have been able to at least protect themselves, if not actually take advantage of the situation in some way. But regardless, looking, because I've been covering this and trying to show you what's happening here, but all throughout 2022 it has just gone up, and that's natural gas. And you could look here, according to Goldman Sachs, they have continuously, as you can see here, we have raised our forecasts once again for oil, and you could look at where they expect it to be, and of course nobody knows, but they are seeing oil going much higher than where it is today. Nobody knows, but this is where we are at. Okay, look at this. You see countries, as oil has become more expensive, as commodities have become more expensive. In this case here, cash-strapped Sri Lanka looks to Russia to quench thirst for oil. Same kind of thing that happened with India. They were saying, hey, it's at a discount, I'm just going that way. That's just a matter of fact. That's what's happening here. And then we have this: gas traders rush to secure LNG tankers. Ship rates soar as sanctions on Russia prompt a reshaping of global energy flows. So there's so much happening right now in the commodities markets. We need to be aware of all this. The price that you pay, it's not just the company ripping you off, though that might be the case. Okay, there's a lot happening here, and I've been covering it extensively on the channel. If you want to know more, simply hit that thumbs up button. Doing so is going to notify the algorithm that you want to be aware of these videos. So simply hit that thumbs up button. Let's get into the next topic here. I think it's really key to understand one of the aspects with commodities has been this big change. And we have seen interest rates rising along with inflation. Inflation, as we define it here for the moment, price inflation, it's going off the charts. And the only way to actually have that settle down is to increase interest rates. And we'll give you a couple examples of that. In this article here, they're talking about the Federal Reserve, and I wanted to make this very clear. So we'll spend a moment on this. 30-year mortgage rates rose to a recent high of 5.6%. That's 200 basis points above January. So remember, just a small increase on the Fed funds rate has a considerable effect on what happens with mortgages. Okay, so we watch that going up and up and up, right? As conditions tighten, we watch how this impacts the individual. That's a $400 in additional monthly payments on a $300,000 loan. And what would it be if it's a $500,000 loan? If it's $1 million loan? Of course, now this becomes a problem. You see, that's what impacts the sales of homes. That's the number one factor. Now they're saying, well, There's not enough homes. We need more homes. We need millions of homes. We need billions of homes more. You know what they say every time. Well, this is a factor that you can't get around. It is, if the prices are too high, people can't pay it. That's it. Okay. So we're looking at that. And by the way, when you look at 5.6%, this all depends, of course. What about those who don't have the best credit? What about those who maybe work self-employed? They can't go to an A lender all the time. They have to go to a B lender. Those rates are higher. So you see what happens here. There's much more to it than, just that 5.6%. All right. And you can see here, for a company financing inventory on 90-day commercial paper at around 1.5%, conditions might still seem cheap and easy, right? Because if you're financing at 1.5% and inflation is at 6.3%, what's the spread in between, right? That's what they're making. So it all depends on what your borrowing cost is. If you're the average individual borrowing on a credit card, not so good, right? All right. It would take a sharp and aggressive tightening of financial conditions from here to push inflation much closer to price stability. And of course, we will see what happens there. This was brought to me by a subscriber, but I alluded to it a few days ago. And if you're not already, you got to be a subscriber because I'm covering all this literally as it happens, as fast as I possibly can. You are seeing the biggest 1-month lift in interest rates for 22 years as RBA, the Reserve Bank of Australia, moves to curb inflation. So they have lifted their interest rates, the equivalent of the Fed funds rate, up. And you can see here, announced a new cash rate of 0.85%. That is up by 0.5 percentage. So that was actually the expectation. And I covered that here, and other countries are doing the same thing. We watched, Australia doing that. We also saw New Zealand, I believe, did the 50 basis points. Canada did 50 basis points. The Fed in the United States did that, and so on and so forth. So they're all going for, bigger than what they've done in the past. Okay, so that's very important to note. Looking at this, U.S. inflation is running even closer today to its 1980 peak. Fresh analysis of historical price data shows, suggesting to the authors of the study that the Fed is bringing price gains back to its target in similar scale to that of then Chair Paul Volcker. I would disagree with that, but they do make that suggestion here. Okay, after adjustments, the figures showed that core inflation ran at an estimated 9.1% in June 1980 versus the reported peak of 13.6%. So you could see when you factor that in, supposedly, but I just really think there's so many differences today. What we know, what is very clear, is the rate at which they are tightening when you look at all financial conditions, not just Fed funds rate. When you kind of look at it with an overall picture, it is actually increasing at a rapid rate, believe it or not. Believe it or not, okay? That's what we're seeing today, and they're not done yet. All righty. Okay, my friends, let's stop and take a breath for a moment because we are talking about China. I talked about how Beijing, Shanghai, and the 50 to 100 cities around China have started to open up. This is positive. This is good. China to conclude DD cybersecurity probe lift ban on new users. The stock went crazy, went up like 40 or 50% in a single day. And this just shows you that they are supposedly going to let off the boot on the throat of the tech companies. And that, of course, sends all of these tech companies in China rising higher. That looks like that could be the case. So as I said in a previous video, the most contrarian bid possible, and that was, it's been a few weeks now, the most contrarian bet would be China's stocks, specifically tech stocks. So I had documented that previously, got it in black and white. And now what's happening here is that if, we see the stimulus, number one, going through, that's good. If we see the lockdowns and the curbs ending, that's number two. And then you look at this situation with with what they were doing with, in particular with tech stocks. That's number three. There are three factors here for what could be very bullish. While the whole world is going tightening and a whole different scenario, China is going in the opposite direction, it seems. Evergrande, check this out. Evergrande, you thought, oh no, it never collapsed. Money GPS, I hate him. Got tons and tons of those, messages. Evergrande stock, just to let everybody know, all those people out there who said those messages, Evergrande stock, look for it. Look for it and look at the date at the last time it traded. That's a good concern, right? Well, you remember what happened with Evergrande, right? Let's go to this. Fitch withdraws ratings on Evergrande and its subsidiaries. They're just saying, okay, no more. That's it. Evergrande and its subsidiaries have chosen to stop participating in the ratings process. Accordingly, Fitch will no longer provide ratings or analytical coverage for Evergrande and its subsidiaries. What does that mean? It means they're done. They're done. You want to call it a collapse or not? Whatever. They're not trading the stock and they're not basically sharing any information. What do you call that? Whatever. Anyway, just this week, quote, just this week, I received an official letter from the agent Citibank that Evergrande has defaulted on our bond and I will never see my money again. There you go. This is apparently this Dr. Meltzer. He shared a copy of the letter. I have it here in this video under the sources. You look in the description. It's there if you want to check it out. But this is very early on, so just hang in there, and I will give you updates on this, okay? So they're making these suggestions right here. They're not paying their bonds, okay? We know that. And how far it goes, that remains to be seen. And then this, you stayed into the end. Check this out. I've got a tidbit for you that some people and the algorithm are not going to like. So I'm glad you stayed here. Okay, check it out. Dubai sells stakes in key assets to Canada Fund to cut debt. So this is interesting on multiple levels, okay? Canada's CDPQ, hold that thought, CDPQ, okay? To invest $5 billion in DP World's Dubai assets. Okay, so here we go. Dubai is selling stakes in some of its most prized assets, including the port that helped transform the city into a global trade hub, to a Canadian fund as the Emirates seeks to alleviate its debt burden. So this is what happens to any country. I have highlighted this with Greece. I've talked about it in basically places all around the world, that when a country, a city, whatever is in trouble, they start selling off their assets. And even, I was covering it not that long ago, where Italy was going to rent out different things. So rent out, like you can kind of lease. So we could have the Colosseum, the Starbucks Colosseum. I mean, this is crazy what happens here. But then these private corporations or very wealthy individuals could potentially take advantage of the situation here. Okay, that's one aspect. But CDPQ, remember that? Check it out. So this is brand new information, by the way, okay? Then we have this. See this guy right here? Charles Imond? Well, he is the CEO of CDPQ. Now, he was at a very important meeting that took place this past weekend in Washington. Does anybody know what meeting happened there? Does anybody know? Very important meeting. All closed doors, right? No media allowed to enter. Security, big security at all the entrances, making sure nobody knows anything. And of course, any mention of this meeting is essentially cut off from the public knowledge. It gets memory hold. Should I say it? Well, it's kind of the builder. You know, that Berg, you know, that, if you get me, catch my drift. That meeting happened this weekend, and this guy was there. Just so happens that the situation, I'm not suggesting that it has anything to do with this. I'm just saying I never saw this guy at the previous meetings when I looked at the participants list. Maybe he was there. I don't think so. And now suddenly he's there at a meeting of like 100 people. So you know something's going on. That's all I'm trying to say. Okay, what's happening here? What else is this company going to get into? What are they going to buy? How important are they? Who are they connected to? All these things. I'm just sharing a little tidbit of information. I hope you appreciate that. If you do, simply hit that thumbs up button. I want to thank you for doing so. I'm doing content every day on Instagram, on TikTok, on Twitter. You got to follow me on there. I'm doing all different stuff, different than what you're seeing here. And probably you actually get it faster, okay? So check that out at the Money GPS. I'll see you on the next one. Take care.